Hey, it's Mark Yegi here, and I just made a recording about the trade that we completed last week, or at least we showed you last week, and now we like to continue to roll our calls. We actually, if we let that thing go to expiration, we ended up making 3% for the week, but now we've got an earnings week coming up on Tesla. So stay tuned and we'll talk about what happens. All right, so we've got an exciting week coming up. We've got earnings this week. Now listen, if you know my system, you know that these are the weeks that we don't like to take huge chances. Nonetheless, my computer's popping up that I've got to show you some things. And so I'm going to show you a couple of different Tesla options for this week. Now they have numbers coming out this week, so when they report, these are the times that they could swing. This stock could go up 20 bucks, down 20 bucks, down 30, down 40, and you want to protect yourself in these situations. So I'm going to show you one that's at the money, and I'm going to show you one that's a little bit more protected. Not a huge amount, but just to kind of give you an idea of the difference of what can happen going into numbers. So numbers weeks generally brings lots of volatility. So let's start with the stock like we always do. We're looking at Tesla. It's not in a very nice uptrend, right? It's certainly, if you look at this chart, kind of in a downtrend, maybe a little bit sideways lately and below the 50-day moving average. Now, they're going to be reporting numbers this week. I can't speculate. I have no idea if it's going to be up, down, sideways, or whatever. I just have a feeling that with all of the sales that Tesla has and all of the good things going on, even though they've reduced their prices around the world, which impacts margin, I think the positives of Tesla selling a lot of revenue, selling a lot of top line, even though they may not be profitable, I think they're going to solidify market share. And I think that ends up paying off big time later. It's kind of like R&D with Amazon. Amazon, over the last 10 years, wasn't making any money. They were taking all their money and they were putting it into R&D, building their infrastructure, building warehouses and things like that. All of a sudden, when they quit doing that, it all went to their bottom line. I think the same thing happens with Tesla because Tesla's got a lot of add-on products. Anyway, that's a fundamental analysis. We're just looking at the chart right now. And so I think that chart looks like it's got a consolidation going on. And, who knows, with earnings, it may go up. Next, what we're going to do is we're going to look at the options chain. Now, this is an option chain from E-Trade. Usually I use Interactive Brokers, but today I'm using E-Trade. So looking at the 185s, you can see that the 185s are expiring next week. So next Friday, you can get $7.70 for those calls if you sell them. Those are right at the money because the stock closed right at 185. You can see it there at the top of that graphic. You pick up $7.70. Let's look at what the numbers are like for that. We've got the 185 stock price. We're going to short the call at $7.70. We're going to do the 185s, even though to me, you need to be deeper to protect yourself on the downside. 1,000 shares, 5 days. That's 10 contracts, by the way. And so the basis, it brings you down to 177.30 as your basis, meaning the stock could drop all the way to 177.30 before you start to lose money. I mean, how's that for a little bit of cushion in case earnings are bad or the stock reacts negatively? A little bit. $7.70 worth of cushion is certainly worth something. It comes out to about 4.34% of juice for the week. It's just a small weekly trade we're doing. If you annualize that, it's 317%. And at the end of the day, it's $177,000 invested to get back $7,700. So that's the at the money trade. Now, the market's green right now, which means we got the probabilities behind us, kind of a tailwind in a sailboat. We also have the stock in an uptrend slightly, or at least not in a downtrend in the short term. The probabilities are looking good for Tesla. Now, I believe going into numbers, you should be more conservative. You should protect the downside. The upside doesn't matter. We're going to make the maximum amount if it goes above 185 in this case, no matter what. And that's 4.3%. But what happens if we go a little deeper? Maybe go $5 deep, okay? So we get a little protection amount with the $5 deep. Well, let's go back to the option chain. You can see the 180s are trading for $10.40 on the bid. That's what you would get when you sell them, right? You get $10.40. But $5 of that is cushion, right? In the money amount cushion. And so that's a nice thing to have protected. If the stock goes down $5, and you're not going to lose any money on that because your call option is going to go down $5, and when it goes down, you make money on it, right? Because we're short. And so that's a complete offset, right? So you end up making $10.40 at that. Now let's look at the cushion. All right, so you buy the stock at 185, you get $10.40 back, right? We're selling the 180s now, not the 185. So we're in the money. In other words, we're more guaranteed, if you put that in quotes, to make the amount of money that we're striving for, to make the juice. It's going to be a little bit less than we would have if we did the 185s, right? The 185s are at the money. You've got a 50% chance of being right, 50% chance of being wrong. Now, in this case, we're going to the 180s. We have a little bit higher chance of it being above 180 by Friday because it's already at 185. It's already $5. So it edges it out a little bit. It's a little bit higher chance, okay? But for that chance, we're going to get less juice. We're going to make a little bit less money this week. Oh, well, we're going to make 3% for the week, okay? And so this comes out to 3.09%, but our break even goes all the way down to 174.60. So, and we also don't have to take out as much money from our pocket because we're getting $10 back instead of $770. So the position cost is $174,600. So hopefully you can see how that makes sense. If you annualize this one, in other words, if you do it over and over again for 52 weeks, not saying that we can, but ideally, if you can at least get the stock to close at or above 180 by Friday, then you're going to end up making 3% for the week. Not bad. Plus, you get a little bit more cushion. We've got one situation where you end up making 3% for the week with a little bit more guarantee or a little bit more certainty that it's going to happen or probability that it's going to happen. And you've got one situation where you're going to make 4.3% for the week, but it's a 50% probability that it's going to be at or at that strike price of 185. You've got to decide what it is for yourself if you want to do it, or if you want to just watch it and learn. This is not investment advice. This is just an opinion, entertainment, information, however you want to look at it. But this is what we do in our cash flow machine system. And if you could continue to do this over and over again, great. By the way, if you haven't done this, subscribe to our videos, our channel. I can get these out to you sooner. Helps me keep my team employed and get them making videos and editing and getting things out as quickly as we possibly can. Hit a like, hit the subscribe, hit the notification bell so you know exactly when these come out and I can keep making these videos. And if you're interested in learning a bit more, I'm going to put a little trailer here at the end so you can come find out a little bit more about what we do. In fact, I have a webinar that I'm presenting that you can watch the webinar and kind of figure out what goes on in my head about how we do this. You know, there's a lot of people online that put out free YouTube videos on covered calls, just like this one, right? And generally you get what you pay for, right? In my opinion, you have to have a system for investing in covered calls, right? A system is important because you have rules around it. And those rules help keep your emotions in check. When emotions go up, intelligence goes down and vice versa, right? So you got to keep those emotional decisions away from the stock market because you make huge mistakes when you have emotional decisions. And that's what a system does. So we have a system called the cash flow machine, which gives you the rules, tips, strategies, techniques, videos, mentorship, coaching, community, the whole thing to prevent you from making those emotional mistakes. And you know what? Your money's worth it, isn't it? So if you don't want to get involved with us in the cash flow machine, get involved with somebody that has a system around covered calls or a system around whatever you're investing in, because a system is so critical to having rules and keeping those emotions out of trading. All right, enough said. I'll see you on the next video. Thanks for watching. Hi, Mark Yagi here, wealth architect and author of this book on my covered call investing system called the Cash Flow Machine. Listen, what you just saw is just one part of creating reliable income of 2 to 4% a month from the stock market. But you know, if it were that easy, then everyone would do it, right? If you want to learn how I create investment income the right way, then you need to learn and have a system with rules and what-if strategies so that you can learn what I do when the market goes against me, what I do when the stock goes against me, how to adjust my trade so that it's always in a winning position, how much to risk, how to build a multi-million-dollar portfolio that creates income of $10,000, $20,000, or $30,000 a month in semi-passive income. And best of all, the whole cash flow machine system takes less than an hour a week to implement. Just go to cashflowmachine.io to learn more or click this link for for more videos, masterclasses, and free resources. See you there.